Welcome to the Market Wake Up. My name is John. We've had really interesting data recently. China failed to provide the stimulus. We're seeing China stocks down. Bank of England have cut interest rates. And Jerome Powell, in the words of Jordan Belfort, says, "I ain't leaving." We're going to discuss this all in today's show. So welcome to the Market Wake Up. We've had some really interesting data yesterday, and I'm really excited to dive into that with you today. Let me know who's in the chat, who's with us today. Give me a wave, give me a thumbs up. Markets are moving. We've had some China data, disappointed again. Market expectations were that China need to provide some stimulus into the market. And yet again, they've failed to do so. So we're starting to see some Chinese stocks underperform, the Hang Seng in particular, down 3.24% at the moment, basically erasing the gains that were made yesterday. And basically what's happening in China is they're not providing the correct stimulus, or they're not providing enough stimulus. Now, there are some reports out at the moment, which I'll just take you through, claiming that the hidden debt total is around 14 trillion. That is what Chinese officials are saying. However, the IMF estimates that China hidden debt is more around 60 trillion yuan, and we're starting to see the impacts of that. You know, they've brought out some stimulus today to try and help the local governments. And essentially what's going on in China at the moment is there's a big housing crisis at the moment. We're starting to see the fact that people have taken out mortgages on a higher rate, and then the houses in China have basically depreciated aggressively. So people are essentially struggling to pay for their housing. What the China stimulus at the moment is, or what China are trying to do to stimulate, is basically support local governments, support local banks, support banks in general, and allow people to remortgage at lower interest rates in order to try and bring them in line with interest rates and housing prices at the moment. So that hasn't been taken very well by the markets, but we'll dive into that in a minute. Who have we got in the chat then? We've got Adnan, welcome. Ayaz as well. Udo, welcome. And Marina, how are you all doing? Just missed the pound US dollar lower low a few minutes ago. Well, we're going to talk a lot about the pound today. We had a Bank of England interest rate decision yesterday that I will discuss, because it wasn't as dovish as probably what most people were expecting. So UK has gone through a little bit of a transition period recently. We have a new government. We have the Labour government in charge now. We've recently just had the new budget, which took a lot longer to come out than typical, but there's been a lot of changes within the budget, a lot of taxes being put on people, essentially in the UK, or the rising of taxes to try and cover up some of the debt burden that's in the UK at the moment. But essentially, we've had that come out. Bank of England yesterday cut interest rates by 25 basis points, so we're now down at 4.75%, which is good news, essentially, if you're on an interest-only mortgage, because interest rates have been coming down. Bad news is there's a potential for the Bank of England to not do much more. They haven't taken rate cuts off the table, but they haven't taken a hold off the table either, essentially, or even the idea possibly of rate hikes in the future. They're playing a lot of their cards close to the chest. So Governor Bailey yesterday was basically talking about the fact that inflation pressures are something to be concerned about. And there's also concern around the labour market. So there is this kind of on the fence moment for the Bank of England, and you can see that was reflected in price, you know, because he didn't necessarily take hikes off the table either. Pound US dollar yesterday actually traded higher on the day and closed higher on the day. We'll talk about the pound in a little bit more detail in the big bite. I'm going to take you through some economic indicators where I think pound US dollar could be situated in the near future. We're going to take a look at the pound across multiple assets as well, and I'm going to take you through that in the big bite. But let's move on to Federal Reserve Chairman Powell. He was very the press. I don't know if anybody saw the press conference yesterday or read any notes from the press conference yesterday, but Jerome Powell's comments were really interesting. I found particularly interesting was the comments he made. I'm just going to read some of the comments he made out, and essentially what he was talking about, or someone asked him how he felt about Donald Trump winning and whether he would be stepping down, and he responded by basically just saying, no, I ain't leaving. I ain't going nowhere. In the words of Jordan Belfort, or in the words of Jordan Miller, he ain't leaving. So he's also said that he refused to comment about the presidential policy moves of Trump and their impact on Fed's policy next year. Now, it is clear the Federal Reserve are meant to remain out of politics, essentially. They are not necessarily meant to be involved within politics, but we can see how they can blend in sometimes. When he asked if he was to step down, he said no. When he was asked if Trump could fire or demote him, he said that that such a move is not permitted under law. So I feel like Federal Reserve Chairman Powell sticking to his guns. He wants to stay in the job. He wants this soft landing, essentially. He wants to be the guy that's known to create this soft landing within the US. And let's see how that goes for him. But he also commented on some of the fiscal policy as well, referring to the national debt is sustainable, but the path is not. And in a prepared statement before, he said the purpose of this rate cut is to reduce the degree of policy restraint, meaning that positive real rates are very high. And even after the cut, policy is not loosening. So basically, he's telling us here that he still feels that the policy is restrictive in nature. And essentially, they probably have more room to cut in the near future. But that's also going to depend on the pressures on the labor market as well, because the recent jobs data wasn't very good in the US. We could put a lot of it probably down to the hurricane situation and the strikes that were around, but also that it was quite a significant drop lower. I think it was 12,000 jobs I think were created in October, which is just a very, very low number considering that the forecasts were around the 100 sort of area. So we've seen a significant drop in jobs there. They have predicted that unemployment will climb. So that is also interesting, because that probably means they are going to try and cut rates a little bit further if that does start to come into fruition. But he also commented that the economy is strong, consumer spending is resilient. That's a big one because we've got retail sales coming up in the near future, and that will tell us a lot about consumer spending. And we would kind of listen to this as well during the presidential election evening. There was a lot of talk about the fact that Americans are concerned about the economy, but they're still not necessarily acting like they are. They're not necessarily preventing themselves from spending within the economy. Usually, if you were worried about what's going to happen in the future, you wouldn't spend as much. Your spending habits would change. You wouldn't buy luxury goods or you wouldn't buy big ticket items. You'd probably be looking to buy smaller ticket items, more utilities, essentially would perform better. And we did see that cycle happen a while ago. We did do some discussions on sort of Walmart and stocks like that because they were outperforming, and it was kind of telling us how US consumers were spending their capital. So that's something that was interesting as well. But yeah, he commented that the economy is strong, consumer spending is still resilient, the labor market is strong and is not a source of inflationary pressure. But when he was asked about the labor market directly, he did say that it was weaker than expected. So a bit of miscommenting there by him. He said the Fed remains data dependent and is not any path to cut rates. So There's your overnight. There's your market leftovers. Very interesting as well. I love the comments that he wasn't leaving. I thought that was quite funny. Hello to you, Musclay, as well. Thank God it's Friday. Yeah, thank God it's Friday. You know, I feel like this week has been a very long week. All the data that's come out, all the reporting that has been going on has been very interesting to try and keep up with. But let's get into Freshly Squeezed. Let's go through what's been happening in the markets, because there's been some really interesting developments. Let me just change the view of here. There we go. That's a better view. So we've got the Hang Seng here down 3.24% on the day. But if we go and scroll up, we've got the US dollar index up 0.17%. VIX down to 15, right? And we did discuss this. What typically happens after the election is volatility will fall, right? So let me just grab this pen tool. Volatility will fall after an election. And that's exactly what we've had. We had the election, volatility has fallen. Stock markets have been doing well. Any kind of assets that are associated with lower risk have been performing a little bit better. That including the likes of the Australian dollar, which was up significantly yesterday. I think it was one of the biggest winners on the day yesterday, which was up around 1.83%, down 0.63% on the day at the moment, which is very interesting. Obviously, the ripple effect of these kind of China announcements could be felt in the Australian dollar market, as well as the New Zealand dollar market, which is down 0.42%. Dollar CAD rejecting those swing highs yesterday, coming in and closing below the range highs. Very interesting, up 0.23% today. Dollar yen rejecting the 154 handle, up at this resistance level, down 0.22%. As well. Floating on down to some other markets then. So let's go check out the US stock markets. Flying at the moment. US stock markets only up, well, slightly unchanged on the day at the moment, but we've seen that nice risk on rally that formed within the markets. One of the best performing US stock markets has been the Russell breaking through key areas of structure. Yesterday I had a little bit of a down day, but the Russell's doing pretty well. Going on to the FTSE, we're starting to see the FTSE decline down 0.6% today, and the DAX down 0.4%. And we're looking towards the gold prices at the moment. Gold prices did rebound yesterday, bounce off that 50 daily moving average, but down 0.68% on the day. Silver down 1.8%, and oil also down nearly 1% on the day. So really interesting market at the moment. Obviously, we're getting the movement from that data in China overflowing into other markets. If we actually just go check out copper prices right now, if you don't know, copper prices are really dependent on what happens in China, and we can see that copper prices are down 1.5% on the day as well. We did get a little rebound, so we've had quite some decent volatility in the copper market. We were seeing an aggressive move lower yesterday. Yesterday on election day. We then saw yesterday a rebound of that, and today we're just kind of consolidating. So copper's in a really interesting position. I think if we saw sort of more stimulus from China, or at least better stimulus from China to try and cover up the debt problems there, then, you know, things like copper could start to perform well, and we could start to see a little bit of a move higher, as well as the Hang Seng. That being said, let's go check out what's coming up for today. So let me just bring up our calendar. Here we go. So what have we got for today? There's not a huge amount. There's not a huge amount coming up on the ticket today. We've got the employment change in Canada, which could be interesting considering where dollar CAD prices are trading at the moment, still up at those significant range highs. We do have some consumer sentiment, which is going to be very, very interesting when it comes to what happens in the US market this afternoon, considering what's been going on. This has been starting to sort of climb since the end of 2000 or middle of 2022. We have been on an average of a little bit of a climb higher. Last numbers were revised up as well from 60.89 up to 70.5. Then we got China CPI over the weekend. So over the weekend, we could start to see a little bit more of this pressure over in China. over the weekend as well, it's the 11th of November is usually Singles Day. I don't know if anybody knows about Singles Day. Does anybody know about Singles Day in the chat? Let me know. Singles Day is a very similar to like Black Friday and Cyber Monday. It's a promotion in China. Well, it started in China anyway, and it was for singles to celebrate themselves, and they'd do that by doing some shopping. So it was actually quite interesting because last year it generated 156 billion yuan in sales. So this, I feel, is quite interesting coming up because of the situation in China. Imagine if we saw that the consumer spending essentially, or the spending within that Singles Day is reduced dramatically from last year. That would tell us a lot about what's going on in the minds of people in China. They're not even willing to take on savings or massive savings in that sense. So it would give us a little bit more of an insight to what's going on in the China economy as well. So that's what we've got coming up today. We've even got ECB President Lagarde speaking at some point. Yesterday, we did some analysis on the euro. I quite like the idea of a rebound on the euro, mainly down to the commitment of trader reports, but I'm still waiting for sort of a decision to happen there. So let me know what you guys are trading today. Is there anything on your mind? Let me know. I'm going to go into the big bite. We're going to have a little look at what's going on in the markets today. I'm going to take us through the pound US dollar as well. So let me realize I haven't been playing any music, and we're going to discuss the pound. We're going to discuss the pound. We're going to discuss the UK. Let me just actually bring in the pound US dollar chart. And here we go. So I'm going to delete a lot of these off because we'll do a little bit of a breakdown as well, a little bit of top-down analysis. I know over on the Market Wake Up channel, we don't do a ton of technical analysis, but it's still a big part of what we do. You know, a Market Wake Up, we look at the macro, we try and break the macro down so it's easy, digestible for you to understand and for you to be able to use it in your trading, like me and Jordan do. We also look at sort of seasonal analysis, commitment to trader reports as well. But we are going to add a little bit of technicals into this as well, because we still do the technical side of it. We just don't show it too much here. So, love the music choice. Now I feel like we'll have some whiskey on the rocks. That's what we're going for. We're going for the chill mood. We're going for, you know, I don't know what time it is where you are, Musclay. Is it whiskey time? That'll be interesting for me. It's still coffee time at the moment. So let's get into it. I'm going to actually bring in some economic indicators, okay? Because I talk a lot about economic indicators. We talk a lot about macro. But I also want to go through sort of the expectations of what's happening in the UK at the minute, because we've had some, you know, there's some really interesting updates, and I'm going to bring actually in an article that the Guardian have done in the UK on what's going on in the Bank of England at the moment. So we're going to go through this article a little bit, go through those inflation expectations, and then have a little look at the pound prices. Musclay, it's Friday. Friday's whiskey day, I guess. I like that. Not a big whiskey drinker myself, but whatever floats your boat. I'm a bit of a rum guy, to be honest. Peter, welcome. Hello. If you're new to the channel, my name is John. I'm one of the co-hosts here at Market Wake Up. And we're just about to go through some pound US dollar analysis and some forecasts. Okay. So let's have a little look at this article that the Guardian have done about the Bank of England. The reason why I'm bringing this in, because it just gives us all the data in a concise area. Hello to you as well, Martin. So what did we have last week? Well, you know, they basically said Rachel Reeves is lucky, but Rachel Reeves is the Chancellor. She is the person that creates the budget in the UK, and she brought the budget out last week. Now, the Bank of England have cut rates from 5% to 4.75%, okay? And the budget has made the Bank of MPCs, talking about the pace, basically, of easing. Now, what's interesting in this, though, is that Reeves last week, okay, so the Chancellor who creates the budget, okay, Talked about quarterly growth being at 1.7% as opposed to the 0.9% it was forecasting in August. Inflation, as measured by the Consumer Price Index, will be at 2.7% rather than 2.2%. So that's quite interesting, right? So let's just pick that one out there. Inflation, as measured by the CPI, right, will be 2.7% rather than 2.2%. So they're telling us here that inflation is going to be higher, right? We can go to economics.com or tradingeconomics.com, go over to the United Kingdom inflation rate, click on the forecast here, and we can see that in December, we're expecting to see a jump in inflation, okay, up towards 2.6% and then down and sticking around the sort of 2.2% over a period of time. Now, forecasts take with a pinch of salt, okay, because a lot of things can happen. Between now and then. So, big things could happen, whatever. So we do have to take it with a little bit of a pinch of salt. But, we are coming into the Christmas period now, right? So consumer spending should be up a little bit, or retail sales should be up a little bit going into the start of next year. So being a little bit higher in the inflation side makes a little bit of sense. So that is an interesting measure there, because that to me would mean that we're above the Bank of England's 2% target rate, and that means that the Bank of England may not consider cutting interest rates as aggressively. Okay, so just talking about throughout this is then just going on about the kind of costs within the labour market and X, Y, and Z. But that was the kind of main point here. Inflation measured at 2.7% rather than the 2.2%. That's something that stands out to me. Barry, we have Singles Day in Newcastle every Friday and Saturday night. Involves alcohol, not shopping. Can you explain how you use the commitment of trade reports, please? Yeah, I'll do that in a second. We'll go over. We'll have a little look at the COP reports with regards to what they're doing with the pound at the minute as well, because kind of neutral on the pound at the moment. If we have a look at the GDP growth rate as well, we're expected to see some growth towards the second quarter of 2025, but not anything amazing. The unemployment rate is something that is quite interesting though, because the labour market statistics in the UK aren't a great parameter of what's going on, because we don't get them necessarily released on time. I think there was one point where the ONS didn't release the labour market statistics in the UK for like 6 months. So we just were behind on what was going on in terms of employment. But the unemployment rate could potentially climb. Now, if the unemployment rate climbs, the Bank of England will need to act. They will need to act, and they will try and push this lower, because if we go take a look at a 5-year span, usually anything above sort of 4.2% isn't particularly great. If we go and have a little look at it over a 10-year span, you've got the sort of issue there. Let me go to the max so we can see what happened in 2008. 2008, we were around about the 5% mark, and 5% is usually the okay number. Anything above 5% is usually pretty bad. So it'd be interesting to see if we do see them act on the fact that the labour market could be under some pressure. So that's something to have a little look into as well. So let me bring on the commitment of trader reports then, and I'll explain to you what's going on in terms of what a hedge fund's doing, where a hedge fund's positioned when it comes to the pound. We can even have a little look at some seasonal on the pound as well, but there's not typically anything going on at the moment when it comes to the pound in that sense. So let's bring this over. Sorry, I'll move that screen away just to log in. But let's have a look at where the pound is sitting at the minute. Not anywhere really, not anywhere that warrants me to want to go and trade it in any particular way. But what is quite interesting, let me just take off the long and shorts here. Okay, so when it comes to commitment of trader reports, you get the two reports, right? You get the non-commercials, which are your hedge funds and your speculators, which is this little chart down in here. And then you get your commercial positions, okay? Now, the commercials are not in the markets to make money, but they're in the markets for business purposes. So they will typically do the opposite of what price is doing, whereas hedge funds will be following what price is doing. Now, hedge funds at the moment are starting to skew a little bit more negative on the pound. We can see that we were up at these highs here, and then it started to push a little bit lower. So the net is basically the difference between the long and the short contracts, because it's easier to look at the net. I like to look at both the long and short contracts to understand what they're doing, because the net could be, if you see a big change in the net price, it could be because, either they've got more aggressive in longs or less aggressive in shorts, X, Y, and Z. So I like to look at the long and short just to kind of give me a bit of a bigger picture of what's going on. But at the moment, we can see that commercials are sort of buying pound, which is understandable because price of the pound is falling. Hedge funds are negative on the pound at the moment. So I think from, if you're looking from a hedge fund point of view at the minute, you are looking more towards a negative pound right now. And if we go take a look at the pound US dollar price, from a technical perspective, we're starting to really see that flow through. We've been in this really nice sort of upward trend, mainly down to the fact that pound was quite strong, dollar was very weak at that moment. We then had the flip of the switch where the market wanted to price in the idea that Donald Trump would be president of the United States, and we had this sort of decline in the pound US dollar price. Now, pound has actually held up quite well against the US dollar if you look across the board. I in particular really liked to buy pound against the euro. And that was a chart that has done really well. So you go over to euro pound, for instance. These were some of the shorts that I really liked. I really like this resistance zone up at 84.40s. Market came into that resistance zone again. This was the UK budget announcement, right? So we saw that move up. Pound got weaker on the UK budget announcement. And then since then, euro pound has been trending lower. Mainly down to the fact that the ECB are cutting rates more aggressively than the Bank of England. So this is a chart where I feel if you want to try and take advantage of anything with the pound right now, I think euro pound is a good place to do that. My only concern is there's a commitment to trade a long signal on euro at the moment. But I do quite like this chart. I think if we did start to rally up and hitting towards the 84.40s again, I wouldn't mind being on the short side of this market in particular. But the pound in general has just been a market that has remained very resilient. If I actually go onto my strength and weakness table at the moment and just bring this down and show you this, if we look at the pound, we're still kind of in the higher areas. So you can see here is at 3.2. So we are starting to lose a little bit of ground on the pound at the moment, but it has been a stronger currency. If I just flip over to my strength meter as well, and we have a little look. So the pound is the orange line, and you can see we're in the sort of positive, we're above the zeros, we're in that kind of positive territory. Whereas if you look at other markets like the yen, for instance, the Australian dollar, the New Zealand dollar, those markets are on the decline. So for me, I still like the idea of looking at sort of your pound Aussie to the upside. We have come back into an interesting level. Now, this is also going to depend a lot on what happens in China, because I think the market has been pricing in that sort of China weakness. And if you look at there, we've got this nice little consolidation zone that's forming on pound Aussie, and prices in that sort of zone at the moment. So the way I'd be looking at that is if we get any kind of significant changes here now on a lower time frame, then there might be some advantage to kind of look for a bit of a move higher here. But I'd need to see the technical factors line up at that point on pound Aussie, very similar to pound Kiwi as well. This market has been in a little bit of a bullish trend of recent, and we're starting to come back into those kind of previous areas that were once resistance could be now support in moves higher. Barry, UK unemployment rates are based on people claiming unemployment benefit, not actually those who are unemployed, so it makes figures look better than they are. Yeah. Do you use the commitment to trade indicator on TradingView? No, I don't. I don't think I've found a good one. If you found a good one, let me know. There are a few out there. I've not seen this one. This is by TradingView itself, so I've not seen any of these ones. Commitment of traders legacy metrics. Also, as well, you probably want to use this on the futures market because that's where the COP reports are defined from. I mean, I don't know what this is telling me. Maybe I'll talk about this in another one because we're running out of time in this particular live stream today. But yeah, gold price is really interesting. Pound price is really interesting at the moment. What I really like about looking at sort of the commitment of trade reports, it just kind of gives us an idea of what's going on. And to me, it's showing that we should be a bit neutral on the pound, which, you know, we're not necessarily aggressively short, we're not aggressively long either, and that makes sense. That makes sense when you kind of look at price action at the moment. I'm still sitting more on the opposite of to what most analysts are. I'm a little bit more on the long side rather than the short side of things. Basically, in my opinion, the Bank of England may not need to cut aggressively, and that could be a little bit of a problem. So I think higher interest rates could lead to higher yields, and essentially that could lead to higher or appreciation in the pound. So let me just move over to our take it to go for today as well. So I'm actually going to go on to, I'm going to stick to the commitment of trader reports, right? I'm going to stick to the commitment of trader reports because there's a really interesting signal on Bitcoin at the moment, right? Which probably makes a ton of sense. Now, there was an all-time high in terms of contracts on Bitcoin, and that was typically in the past indicative of a market top, but the conditions have changed. The conditions have changed around Bitcoin. Trump is now in and the market is flying. If we look at what the hedge funds are doing at the moment, they are aggressively short. Okay, so if we have a little look at the net prices, they are short at very levels in the past. Okay, and when they get aggressively short, the market can flip and break out and move higher. So we're starting to see that breakout now. This could be the move in Bitcoin that trades a lot higher. So I'm looking at when we see pullbacks in the price of Bitcoin, could we look to continue those bullish moves in the crypto space? So that's all I've got for you today. I hope you've enjoyed this one. Remember, please like and subscribe if you are new to the channel. We are live every weekday from 8:30 a.m. GMT. My name is John, one of the co-hosts. I'll be back with Jordan next week. I hope you have a great weekend. Take some time away from the charts. As Musclay says, grab a whiskey, put it on the rocks, enjoy the weekend, put your feet up, and I hope to see you here on Monday. Cheers, guys.